Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the euro currency. So you can see yesterday our suggestion, it seems, was correct, and indeed market has dropped really significantly at the open in the United States session. Mostly the major driving factor was the rising of the United States yields, long-term yields on the market. So yields has turned again to upward trend after the retracement. Now rate stays around 2.88%, so very close to the 30% level. So that brought some support to United States dollar and pressed on other currencies. Also, this turmoil around the Brexit is not positive for as the European Union, as for United Kingdom. Finally, at the night, this was strategy in Strasbourg. You probably know that about this. So this also hasn't brought more optimism to the traders, and all this stuff mostly stands negative for euro currency. So currently, guys, we stand at the eve of European Central Bank meeting, and would we like this or not? But we have to make some assumptions on what could be said by the central bank. And as we have discussed this in the weekly report, there's two major points on the table. The first stands in relation to the short-term bonds buying on program by the European Central Bank, but this here we can't make any forecasting. But speaking, and second is the perspective of European Union economy on the next year, and here is the thing that we should that is the issue that we have to think about. So currently, guys, in the current circumstances, I gravitate more to the dovish assessment of the economy, and maybe even the European Central Bank could change the rhetoric about the possible rate increase in the middle of 2019 that previously was announced by many reasons. First of all, is the old topic with the Brexit. Second, you know what's going on in France, guys, and Emmanuel Macron already said that this will cost approximately 10, 20, or 12 billion euros to the budget. So it's not the end yet. So that's the serious hit on the economy. Also, there are some problems, as you know, with the debt in Italy, and in general, it's situation and political situation in the European Union, different countries, including the Germany, are not very stable. So, taking all this stuff together, hardly Mario Draghi will start some relations in favor of possible hawkish policy, rate increasing, or something of that sort. So I think that it will be either the statement will be either the same as it was previously, or more probable that even could become the more dovish. In such circumstances, guys, I more gravitate to idea that probably euro could weak a bit more, could become weaker. The couple of sessions. I'm not pretending on the dropping right to 12 even, right to the OP target. Although here, guys, actually it's relatively free space because the 618 support already has been broken here, and here market actually doesn't have any support area, so we do not have that result. It's relatively free space, and theoretically market could drop, especially if you take into consideration the range of the most recent candles and take a look there. Very similar to each other, as in terms of the price behavior, so opening with a retracement and collapse, as in terms of the range. So if you count approximately the same range to the downside, well, who knows? Maybe within the two-session market could appear at 112 area. That's what we see on the daily. Here also, guys, from the pivot framework, you can see the market has dropped below monthly pivot point, below weekly pivot point. Now market stands at the support of the weekly pivot support 1. So just minor pause. But also we have some intraday targets, just talk about it a bit later. So on the 4-hour time frame chart, we have the same triangle. And yesterday we said that breakdown probably has more chance to happen. We stand here with the fifth wave inside of the triangle, and usually exit stands on the fifth wave. As a rule, not always, but very often. Taking into consideration the speed of the dropping, this collapse that we see, the chance on the downward breakout seems very probable. Now, what we have on the hourly. On the hourly chart, market has completed perfectly this ABCDOP target, AB equals CD. Taking into consideration the very fast action, and here we have something that reminds us hand shoulders pattern, guys. As you can see, chance to downside continuation right to the XOP stands very significant. XOP stands at 1250 target, so that will be our half step to daily 12 even to this target. So now market stands for retracement. Taking into consideration the harmonic swing here, you can see it repeats very often. I would suggest that we could talk about the retracement right up to the confluence area, 1350. It's very probable. That's a good area for thinking about taking the short position. Also, take a look at its previous lows will be in the middle of this collapse. Maybe some pattern will be formed here. Currently, I do not see it, but if you will drop it a bit more, maybe 15-minute chart, maybe here is some kind of the ABCD pattern, maybe 3-drive cell will be formed here. It's also possible. Just keep an eye on it. If no patterns will be formed, just think about this level because it's suitable for possible taking of the short position. Because currently, guys, I gravitate more to the downward continuation, and it's just that it's probably not a leg down should happen. So that is our current view on the market. But mostly it will depend on what European Central Bank will tell tomorrow. This will be very, very important driving factor for our market.